How's it going, guys? Welcome back to the channel. My name is Alberto Capolaco, as many of you guys know, and I'm truly excited to share with you guys my best advices to start investing in real estate and what things you should look out for and consider before you start investing. Real estate can be a very, very lucrative field. You can make a lot of money in it, become financially free, and perhaps even build generational wealth for your children, grandchildren, and etc., etc. Nonetheless, it is very, very important that you are informed when you make a deal, that you know what you're doing, and that you also have the proper people helping you out, that you build a team of professionals that can truly help you achieve your goals. One of the main things you should consider before actually getting into a deal is to get informed on the market that you're planning to get this deal done in. It is very important that you understand the vacancy rates in the area, that you understand if there are main businesses in the area, what the future holds for the area. Is it an area of high unemployment? Is there a lot of employment? Are there schools, parks? You have to consider everything in the area that you're looking to buy this property in. It is also very important before you start investing in real estate to set a realistic goal for yourself, and you also have to understand what you're going to be doing. Do you want to get cash flow? Do you want to go long term, short term? Do you want to fix and flip, basically buy a property, renovate it, and sell it for a higher price that you bought it at? So it is very important that you set a goal and you understand what your long term and short term vision are. That's actually very important. It may not seem like a huge thing, but it can truly help you find good deals and focus on the areas that you are truly interested in. Also, a very important thing when you're looking to buy a deal is to visit the property. Several people overlooks this, but it's very important to see the property in person and make sure that what is being advertised, whether it's on the MLS or wherever you found this deal, even if it's through a trusted broker or agent, it is very important for you to see it yourself. You need to see the conditions of the property, and you have to analyze if it truly is what you expected it to be, and if it matches your goals as well. Also, it is very, very key and crucial to pay attention to CMAs and property appraisals, not only of the property that you're looking to buy in and of the area. A quick tip that I have for you guys is that even if your property is in very good conditions, it's a fantastic property, worth a lot. Well, if there is a neighborhood, if one of the properties in the neighborhood is in very bad conditions, that will actually bring the value of your property down. So it is very important for you to be aware of all of the properties in the near neighborhood that you're looking to buy in. Also, you have to estimate the potential of your investment. You have to estimate potential losses, potential gains. You have to, kind of foresee and forecast everything before you actually get this deal done. You also have to consider the power and risk of leverage. So basically what leverage is when investors go and look for banks or angel investors or simply anybody that truly believes in their vision or in their deal, well, they go and look and gather money from other people. Basically what you often hear as a mortgage. And basically what happens is these investors, these people is using other people's money to buy assets, which is a fantastic way to conduct real estate, to conduct business. It is truly one of the main forces used by investors to actually create wealth. However, it is very, very crucial that you understand the risks of this in case the property doesn't have the amount of tenants that you expected, or doesn't have tenants for a given amount of months and you're not able to pay that mortgage. But well, there are several risks that you need to understand, and every single intelligent investor uses leverage but understands the risk of leverage, because you have to be aware prior to getting a mortgage and going down this route. You have to be aware of every single potential downfall that could happen along the way. Also, for mortgages, you have to understand every single type of mortgage, and you have to see which mortgage actually is best for you in your own given situation. No mortgages are in one size fits all. Every single deal may have a given type of mortgage that may work better. So it is very important for you to be informed about every single type that you may qualify for. As a rule of thumb, 20% down is what the main investment mortgages will require you to put down. So you have to, let's say you want to buy a property that's $100,000, you have to have $20,000 under your own name, and you have to put it as a down payment in order to be able to get this mortgage. Also, be aware of zero down payments. When you can just get a property without any down payment at all. Be aware of those. adjustable rates, be aware of those as well, and balloon investment mortgages as well. Not saying that these are scams, not saying absolutely that they're illegal. Those are absolutely legit ways, but you have to be truly aware of those because they also involve a higher risk, and simply be aware of those. So another thing that you need to keep in mind is whether you want to become the landlord of these properties that you're purchasing for rental or not. Because keep in mind that when you become the landlord, you have to take care of the rent or any potential pitfall that the property may have, any adjustment that you may need to do on the property, or any type of issue that the tenant may have. Well, you have to be available for these tenants 24 hours a day for 7 days a week. So pretty much you have to be on call for these tenants, which can become very tedious once you start scaling up your business. Once you start having several properties, it can become tedious to deal with all of this. So what many investors do is actually hire a property manager to take care of all of this for them. So this is something you need to be aware of as well. So another thing that you need to keep in mind is the vacancy risk. Even if the area in which you buy in has very low vacancy rates, it is always important to be aware that it could happen. It could always happen. It's very possible. And the downsides of this is that when the property is not being rented, you're not getting any income at all, and you have to pay the mortgage if you're still in the first years that the mortgage is still being paid, or any expenses, any any type of trouble, taxes, anything, you need to pay for that. So you need to factor this in. An advice that I have for you guys is whenever you're looking for the owning expenses of the property, always factor in around 2 to 3 months, a couple of months for the whole year, every single year, because in case it happens, you need to be aware and you need to be prepared with money on the side to cover up those expenses for the amount of time that the property is not being rented. Another thing that you need to keep in mind and be aware of is that real estate is not a type of business in which you're getting rich overnight. It takes patience, it takes time. The first couple of years that you're investing in rental properties, most of the profits would actually go into paying the mortgage, paying taxes, paying expenses. So you're not going to be seeing these overwhelming amount, maybe millions of dollars coming in. You're not going to see that right away. However, if you're patient, if you have a goal, this is why I said that setting a goal is important, because it helps you become patient, it helps you see the long-term results. Well, when you do this, it actually it helps you out a lot, because you're not going to be making all of this money right away, but in the long run you're building wealth, you're owning several assets, which is key to actually having that wealth, not having many liabilities, having a lot of assets. So this actually helps you, because after a couple of years you may actually have been paying the mortgage payments. The tenants are actually paying for your mortgage payment, and then you're the owner of this property and you're getting thousands of dollars every single month from all of these properties that have different tenants in them, and you're making money basically because you used your brain and you've been smart and actually used your money in an effective way. As I said in a previous video, 90% of all millionaires since the 19th century have actually been created from real estate itself, from owning land. So it is very important to understand what you're doing and be very proficient and working with smart people, as I always say. Yeah, also real estate is very, very good for diversifying your portfolio. If you have stocks, bonds, or other type of assets, maybe art, paintings. Well, real estate is a great way. It's a great addiction, especially rental real estate, because you're making money. You're getting money every single year, basically off of your investment. It's an asset, so it's always bringing you in money very effectively, and it's a great way to diversify your account. Also, the advantage is that when the market has a downturn, usually stocks and all of these other types of investment will go negative, will go below their usual uptrend. And well, actually for real estate rental, unless it's a very serious recession, as we saw with the 2020 COVID-19 pandemic, well, usually real estate, you always have people that needs a place to stay. You always have people renting, so you will make money regardless, unless, as I said, people is losing jobs, there's a great recession. Then in those types of situations you will encounter troubles as well. However, with every single type of investment there is always risk. The smart investors take calculated risk, which is the key factor. When you're educated enough, you can take calculated risk and not going into an investment kind of blindly. So to recap this video, guys, it is very important before you invest or while you're investing to keep in mind these things. When you're looking at a deal, keep in mind the neighborhood, the location of the property. Keep in mind your personal financial situation. This is very important, so you know what kind of risk you can take and what kind of risk you cannot take at that precise moment in time. Keep in mind taxes, the leverage, the rental incomes in the area, because if you're charging $1,000 over everybody else in the area and your property is more or less the same as the other ones, it's not going to work. So you have to keep in mind the rentals in the area to see if your investment even makes sense in that area. Also look out for the quality of the property. This is very important. Make sure the property is great, because you may be purchasing a property that looks great and it's cheaper than the other ones, but it's slightly cheaper than the other ones, and then you come to find out the roofs on those other properties are like 2 years old and on yours it's like 20 years old and you have to replace it. So that's very, very key. Always make sure you know the property, you know the quality, you know every single assessment that the property may have. Make sure you work with professionals that truly know, that are trustworthy and have a lot of knowledge that can truly help you make the difference. And yeah, this actually leads me to my last point, that you need to make sure you're even ready to start investing, because as I always say, it is very important to get educated on the topic, know as much as you possibly can. But at the end, you're never gonna know everything about every single field, So in my opinion, it is very important. I myself have built a team of several professionals. I suggest every single one of you guys that is actually looking to invest to build a team. Get appraisers on your team, professional brokers, professional real estate agents, professional accountants, people that can actually help you build your financial freedom and meet your goals. Because by yourself, it's definitely achievable, but I believe that in a team environment, in a trustworthy team, you can actually achieve your goals much faster and much more efficiently. However, this is just my advice. You guys can decide to, get your own, go on your own path, do what actually feels right for you, and that's completely right and fair. Nonetheless, guys, thanks a lot for tuning in again. I'm very grateful for each and every single one of you guys that, keep supporting me, liking, viewing my stuff, sharing it to some friends. That really helps me out a lot, and I'm very grateful for each and every single one of you. I hope in today's video I could actually bring you some value, help you out some sort of way. And until next time, thanks again, guys.